Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the continued coverage of all the sea of red on the crypto charts, as well as trying to sort out some of what's going on in the traditional markets, which, of course, is probably the primary thing which is suppressing the crypto market. We do see some poo coins kind of firing off like a good old EOS, as far as I understand that network is pretty much good for nothing. So that's not necessarily a great sign, and just a lot of red on the board in general as massive profit taking has occurred, but also as the floor of the market has been held. We're not seeing devastating numbers. Anything between 5 to 20% pullbacks tends to be just normal profit taking. And as we can see, the average here is probably around 15%. So we really haven't gotten to any type of a panic mode yet. If we look at stocks, very similar thing occurring. We do have, just a little bit of green starting to pop up on the board as the market is finding a little bit of footing this morning. However, it's not really significant enough to overcome the just a massive amount of profit taking, probably ahead of the news of Jerome Powell speaking at one of these conferences. Where he might give a little bit more certainty to the market. Of course, the lack of certainty about what's going to happen in September is causing just a little bit of a volatility spike and a threat to completely turn around the market to the downside. On the news, of course, we did have the manufacturing and services PMI, some new home sales numbers. As you can see, the new homes market does continue to soften, and it is at a fair clip. The expected forecast was 574,000, but we actually got 511,000. So that's not good for the real estate industry, and it does suggest that the economy is starting to take a bigger hit than maybe what the market had priced in. And so it's going to be interesting to see what type of dynamic this plays. Also, considering that the market tried to price in basically three interest rates cuts in 2023. They're making projections, and so they're building in that exuberance into the market already. But of course, we are going to get on Friday, we're going to get the PCE data, which the Federal Reserve uses critically for its decision making process. And while we'll have more information coming in before their September meeting, of course, this is going to be very significant. And if inflation ends up being worse than what was expected, you can see some expectations here on the monthly 0.2% and on the yearly 4.7%. If those numbers end up being worse than what's expected, expect markets to tumble because, of course, Jerome Powell will also be speaking at the Jackson Hole retreat. Where he might offer some clarity as to whether or not the Fed intends to, just kind of ease up a little bit on its tightening path, at least soften some of its activities rather than harden them, if not totally reverse course. Of course, there has never been an end to a bear market, one of these macro bear markets, until the Federal Reserve has pivoted to the other direction. And so, if Jerome Powell signifies that he's not ready to pivot yet, that inflation is still problematic, and that the Fed is still going to tackle inflation coming into 2023, or at least through the end of 2022, then there's a good chance that markets are just going to take the recent high that we've had as a lower high, and that the market may continue to dump and even put in new lows. Again, this is a situation where the market has pretty much counted their chickens before they're hatched. And if the Federal Reserve indicates that that they are likely to be pivoting in their policies, then the market may just explode into a major continuation of a bull run, maybe even a bull market, as we define here at Alpha Commission as a bull run plus confirmation of continuation. That's a bull market by our definition. I know that there's no legal definition for these type of things, such as recession and bull run versus bull market, etc. But for our purposes, a bull run is a 20% increase in stocks, and then a bull market is a 20% increase in stocks, followed by a pullback, which then indicates the likelihood of continuation of that bull run. And that would make a bull market. Right now, we do not have any type of confirmation that this market is going to continue going forward. And for all we know, it could take a huge dump lower to even a new low, especially if the Federal Reserve doesn't give confidence to the market. And what we can see here is that we are priced in an area where, although we totally obliterated the possibility of a super bullish bounce off of this support, we're actually using it as kind of a resistance right now, suggesting we might hit these lower numbers relatively soon. Um, we still are in a range where we could make a higher low on the stock markets. This is the Nasdaq 100 E-mini futures, and if we made a higher low, that could still be pretty bullish, and we could still pop back out of this downtrend and put in a macro uptrend. But losing that, most likely the market is going to become extremely bearish, and they might be targeting either a double bottom or a new low, assuming that we can't hang on to this area up here around 12,200 and let's just say 40. Same thing is happening on the S&P 500. Same thing is happening basically in every market. We're having these potentially fake out breakouts of the macro downtrend based upon having recovered about 50% of the drop from the top in stocks, and that suggests to a lot of people that a new bull market is possible after this bull run here has a significant pullback. However, uh, bear markets often have fake outs. They often have fake outs to the upside that just fake out the breakout of the downtrend, and then it falls back into the downtrend and continues to make new and sometimes even shocking loans, leaving a lot of people to hold the bag who FOMO'd in to those bull runs. Now, make no mistake about it, we did have a bull run. This was a massive increase in price, and if any of you guys took advantage of that with us, then you are doing pretty good right now. How can I say that? Well, if we jump over to Ethereum, let's just look at the professional exchanges. You understand that we got into Ethereum, right, after this breakout and on the pullback when we used this diagonal as support. The alpha fam got into Ethereum right here at 13,000, approximately $50, and then we just had a massive bull run of about 50% to the upside. If you're making a 50% return on your investment, that is a bull run. Okay, in crypto, anything over 40% is a bull run, and of course we did see ETH just pull off just an incredible 100% gain here on the professional exchange, where it went from approximately $1,000 all the way to $2,000, and now we're having this type of a pullback. We did put in a new CME gap. You can see this gap in the price chart on Ethereum, and so that would be low-hanging fruit to try to fill this gap just a little bit more before perhaps continuing on the downside and maybe even filling in this gap here at 1300. So guys, just pay attention. If this market does decide to continue going down based upon what the US dollar is doing in terms of pumping, in terms of the volatility increasing in the market, and in terms of the Fed Chairman Powell or the Federal Reserve or inflation numbers themselves coming in worse than expected, then we could see maybe ETH and Bitcoin and some of your favorite altcoins pumping a little bit just to kind of fill these thin candles up here, retest some values, just fill some gaps, and then maybe work their way down to lower numbers. But it's just interesting that if you had bought with us, Alpha Fam, that you would still technically be in the green, even if you hodled. And so we're not in bad shape over here at Alpha Commission. We're doing quite well and beating the market, whereas most people are just feeling this kind of crabbing sideways action and getting significantly hurt, which is unfortunate, but that is how the market is played. And of course, we're not looking to get the absolute pico bottoms. We're not looking to sell the absolute pico tops. Nobody can do that. But if you can get in at a relative value, and if you can sell higher than where you got in, or vice versa, if you're shorting, of course, then you're doing really well in a very, very difficult market, and you should applaud yourselves. You are doing a great job, Alpha Fam. Keep it up. Of course, there will be setbacks. We can look at some coins like perhaps ADA, where we just fell below our critical levels, and this happened with Kadena as well. This market is merciless. I tell you guys all the time that we can end up just coming back down to our ultimate support, and if Bitcoin loses its current level, then we could in fact even find new lows on these charts, which I have marked out for you and that I warned you in advance before we got into our positions. But as you can see over here at the Alpha Commission, even if you made the mistake of not selling with us at these critical levels, right, including one up here where we did end up taking profit, and you had two chances to do so. If you didn't end up taking your profit in these red zones that we had marked out on our way up, and then buying back in the blue zones when we found support. And by the way, that's the critical issue, guys. You don't buy in just on a little bit of chop. You buy in on some type of a confirmation bounce. You buy in on your indicators really looking like it's time to buy in. You buy in on the macro news being good. In the case of us moving up on this line, what was happening is volatility was going down, right? The news in the market was improving, right? The US dollar was going down, USDT was going down, and of course, all of these factors were in our favor, as well as the stock market was pumping. And so, of course, we can take buyback positions under those conditions in the market. But the reason why I didn't say, any specific price to buy in at least, we could hypothesize that it could, hit this level or this level or this level. We could hypothesize that, but in fact, unless the conditions are ideal for buying back in, I don't buy back in. And so I haven't bought back in yet. I will be waiting to see what the Federal Reserve says. I will be waiting to see what happens with the stock market. I will be waiting to see what's going to happen with the US dollar, which as the dollar rises, it oppresses markets because everything is traded in dollars. And so if the dollar is stronger, then people want to have dollars. They don't want to have risky assets. If their dollar is going to hold its strength, right? And you may say, well, what about inflation? Of course, that's a very complicated issue. The dollar is rising against other currencies, which also are experiencing inflation. For example, like the Turkish dollar, which has just been devastated, or the euro, which has just been, it used to be worth like $1.60, and now it's worth less than $1 approximately. And so what's happening is that the relative dollar strength is increasing. That doesn't make it easier for Americans. In fact, it makes it harder for Americans to trade because things cost more from another country's perspective. If they're buying American, things cost more because of the strength of the dollar. And so all of these things, inflation, recession, all of these different factors, that have been going on in the world, including war and blah, 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 they are really creating just some of the most difficult to navigate trading conditions that we've seen in probably our generation, or since the global economic crisis, and since 9/11, and since the dot-com crash, right? But this thing that we're currently going through, it has elements of all of that, plus elements of the Cold War, right? And so it's just extremely complicated. And to anyone who's been buying in and taking profit, buying in and taking profit only under ideal circumstances, waiting to buy their time. We didn't take this trade. This was something that I said that you could probably take, but I didn't endorse that one. And then this is a trade, even though it worked out. And then this is where we actually got in and walked up, and then ultimately took our profit at these levels. We had a stretch goal, but it was only, conditioned upon taking our profits, because the motto of this channel: always be taking your profit, right? Always be selling. You don't need to hodl these coins in a macro downtrend. Right? You could need confirmation of a macro uptrend before you start hodling, in my opinion. That's my philosophy, not financial advice. But if any of my friends who are watching, can take advantage of some of the lessons that I've learned in the market, then maybe that's good for you as well. But until we have a confirmation of a macro uptrend, I don't see any reason to hodl a position, because I don't think that we're in or entering right now a macro bull market, which would just have my hodl coins increase in value dramatically over time. Until then, I'd rather be trading in any upward position, right? In a downward macro market, right? In a macro bear market, I'd rather just be trading, quickly selling, and then waiting for a major retrace before buying back into any position, but only buying under good conditions. Today, I can say the conditions do not seem favorable. We might get a pump, but we could also see a dump to these lower levels. And just for today, this week, my assessment is that the market is relatively untradeable. Now, did we have a little bit of double bottoms on some of these coins? Yeah, and could you trade that little tiny pump that comes off of these like little local double bottoms here? Yeah, sure, of course. You can always trade these little W's if you're able to snipe those things, if you're perhaps using leverage and you're practicing good, risk management. But can I really recommend that for one of these long trades? Heck no. I have to wait until circumstances in the market make sense. And we can see basically the same thing happening here with Kadena. Of course, for Kadena, I did make a little bit of an exuberant position when I suggested, by the way, this wasn't a suggestion to buy just on the descent of the price. This was a suggestion to buy when we have a confirmation of a low. And I did expect that we would probably sit on top of here if the market was going to continue bullish, but it didn't. And so, what was I warning? Every single episode that we talked about Kadena, I was warning that we could have a full retrace because Kadena, as I've mentioned every single episode I've talked about Kadena loves to do a 100% retrace. Okay, maybe it's like a 90% retrace, but you can see it just takes every move back completely. And we can see this on its macro chart. It takes back everything, right? It takes it all back. That's what Kadena does. And so people who are just specializing in hodling Kadena, I'm sorry, I'm not there with you, okay? I can't do that unless we enter confirmation of a macro uptrend under extremely ideal conditions. Now, can I recommend that we buy in on these trends, right? On these uptrends, you see this green area that I have marked out here. When we broke this curve, right? When we broke this kind of decline curve to the upside, and then found support on a higher low, yes, that's where we could say perhaps, there's a chance. And by the way, this box is just sitting here waiting to be moved. I didn't suggest to buy in here, just like I didn't suggest to buy in here. This was just a vague number. I was even thinking that maybe I was too bearish when I put here. On the episode that I was talking about this box, I was saying maybe I'm being too bearish, but in fact, we find out this box should have been even lower. And so the key point here was only that I was expecting a major retracement, and then only when we find support, get confirmation of support, and then also have ideal trading conditions, then we can consider, to perhaps do a buy-in for a longer hold. So this box also is not confirmed yet because we don't have the macro conditions for a buy-in. And I just want to remind you guys of something. We had a very similar setup up here, right? We did a full retrace. We came back down to one of these, diagonal positions where we had just been basically making diagonal support, right? We ended up doing like the full retrace here, right? Just doot, right? Started to sit in that level, and then what happened next? Ooh, we had a major collapse in price, right? And so that can happen again. If you guys think that I'm just being super bearish, you guys can be surprised. Many of you didn't like that I was selling my Kadena at $2.40, right? Why did I sell at $2.40? Guys, we were up 60%. You want to sell when you're in the green. You don't want to have to wait for one of these downtrends to then break support, and then you have to panic sell, and you made nothing. You lost all of your money from the last couple months of trading. You want to always be selling, always be taking your profits. That's the motto of this channel. Always be taking your profits. Do not be loyal to these coins. These coins will not be loyal to you. This is a trading channel. If you want to talk about hodling for the long term, wait for confirmation of a bottom of the market and a macro uptrend. We are in a macro downtrend, and there is no way around that. This has been a merciless macro downtrend, and you guys who are hodling, you guys who think that it's just going to go up only from whatever position you bought in, you are going to be seriously disappointed. And yes, Bitcoin and ETH and the crypto market can fall down to new levels lower. And if you haven't sold for break even, we got in down here, you're still in the profit. Guys, if you bought in with the Alpha Fam, you are still still in profit even if you were a hodler on Kadena. There's nothing that has violated our first buy-ins. If this ends up being the bottom of the market, then you bought the pico bottom of the market with us. We bought at the lowest prices, possible, other than these kind of fool's prices, just catching falling knives. We bought the absolute lowest confirmations possible. And then if we continue to go up, well, great. But guess what? I don't count on this being the bottom of the market. And so I'm always going to be selling. I'm always going to be taking my profits. I'm going to be buying pullbacks on trend lines under good market conditions when USDT is going down, when the US dollar, the DXY, is going down, when the general stock market volatility, the VIX, is going down. I'm going to be buying under good conditions. This is not good conditions today, guys. Today we're having bad stock situations, bad dollar situations, bad USDT, uh, scenarios, right, where these things are just pumping up and making it very difficult to trade. All of these acronyms, they get kind of jumbled in your head, right? USDT, right? The USDT dominance is the percentage of the market which is being put into Tether. And of course, that's the most dangerous chart in crypto because the more people are putting their money in USDT, right? That means the more that they are just selling all of their coins, right? And so as we see USDT, as we see the US dollar, as we see the VIX, the volatility of the stock indices, just spiking up, those things are all bad for trading. And so I have no need to buy here until I have confirmation of those conditions improving. And I'd rather buy higher under good conditions than to buy low under bad conditions that can just dramatically fall, right? Of course, if you wanted to take a chance at some of these support areas that have typically held up, you can see we have this background blue color here, right? Of course, because that's been a good support area for us. But we also have this diagonal support. And so we had basically two supports. And if you wanted to take a chance there, I mean, that's up to you and your risk management. Of course, we did put in a little bit of a local higher low, and we could potentially retrace some of this area, maybe put in a lower high. Right? If we do continue a downtrend, because we do have a bit of a low formation going on here. But that's up to you guys. That's not something that I'm going to call. If we look at our indications, it does seem like there should have been a chance for a bit of a pump. Let's see on the daily. On the daily, there might be something coming up for that, but it's extremely weak, guys. It's extremely weak, and it's going to be dependent on all of those macro factors. And because of that, I just can't give a huge endorsement until we make some more proof of concept that we have bullishness, which we just don't have yet. Of course, for ZIL, ZIL has also just come back to our kind of bottom level support, just fully retracing everything. And so if you had bought in at some of these levels, that we were suggesting, at 37 cents. Yeah, 37 cents. That was the recommended price that I gave to the Alpha Fam. I remember the first time that we were looking at ZIL, it was 37 cents was the projection I was telling you. We got a nice 33% increase out of that, and we had 1, 2, 3, 4, 5, 6 days to sell at that 33% increase in order to make your money. And if you didn't sell there, I'm sorry. There's just nothing that I can do. But look, we have the dotted line there, and then we have the green buy box. I haven't been focusing on ZIL because, in my mind, it's been a little bit troublesome. I've been focusing on other coins, but the recommended price that I had for my entry was 37 cents after I had goofed up and bought here first at 42 cents, a mistake that I admitted, but that I did not recommend to anyone at Alpha. The recommendation I made for alpha commission was waiting for 37 cents. We got that price. We pumped 33%, and then of course we've been selling as Bitcoin and Ethereum have been turning around, and now we're basically just at break even, a little bit higher than our entry price. And so again, you're still in profit, but just to be aware, guys, that as stocks are looking very ugly, right? Again, I'm going to show you these charts. As stocks look like they have the potential to just retrace and lose everything, you could see your altcoins just come down to new lows. And that's why if you're at break even, you're going to have to be making some really hard decisions about whether you want to hold that position even if the market could continue to dump to much lower positions. And if you sold at a profit with us, way up on the price level, on these prices, when our coins were just, up in the air, doing extremely well, then of course you're just sitting pretty. You're just sitting pretty in your cash, right? Ready to find out what the market confirms as the next low, or whether it confirms this as a bottom, which just has not really been confirmed yet. If we do jump over to Bitcoin, however, we can see that the lows were pretty well defended, and we did get a little bit of that kind of double bottom structure going on here, but a very, very weak reaction. And the reason we got that weak reaction is because, of course, USDT is jumping up. The US dollar is jumping up. The VIX, the market volatility is jumping up. And of course, we have that bad news, that potential, um, you know, um, market news, pardon me, from the Federal Reserve coming up on Friday, which is that, if inflation isn't going as expected, then the Federal Reserve may indicate that it's going to increase rates again, as opposed to what the market was expecting, that the Fed would decrease rates 3 times. The stock market counted their chickens before they're hatched. They were thinking that the Fed was going to decrease rates 3 times in 2023. And so this entire pump was based upon the expectation that the Fed is going to actually end up pivoting and being forced to lower rates in order to avoid a great recession. And if what they find out is that the Fed is actually going to increase rates again, then we could have just the market take all of this back and perhaps reach even new lows. I'm repeating this just so people can understand the hypothesis and the theory of the market that I have, because all of us should have our own hypotheses and our own theory of the market that we are working with as we're trading and as we try to understand the macro conditions, and that will guide us forward. Now, obviously, I have the concept that I'm just in a holding pattern right now until the Fed gives a clear sign that no, they are in fact going to be increasing rates, or yes, they will be pivoting and decreasing rates, in which case maybe we could get a continuation upward. And so those things have to be confirmed before I can do more trading, okay? And so we're going to find out a little bit more information by the end of the week. And guys, you don't always have to be trading. You don't always have to be in a trade position. It's okay to just take your profits. We did very well in Kadena, 60% profits. We did very well in ETH, right? What was it? 60% profits as well, right? 40% profit, something like that. And then, of course, we also did extremely well in ADA, right? ADA was 30% profits. And we also did extremely well in Zilliqa, which was that 30%, increase. And so, guys, we have just made profit after profit after profit after profit. And because we've always been selling, We've always been taking our profit. We made money even as this market has lost its footing and has started to break down out of some of these macro structures that were beginning to be formed. And while some of this can look a little bit comical, when you see things change up, right? When you see any type of pattern deviating from its normal structure, you can understand something might be going on, right? It's not the pattern itself is not important. Some people use harmonics, some people use triangle patterns, some people use curves, some people use EMAs, some people use fibs. People use all types of different methods in order to recognize patterns, including the shapes of the candles themselves, right? In order to just figure out when are there deviations in the patterns, which can signify a change. And it doesn't matter how silly the pattern is that you're drawing. If if it's just for fun, I called this the Cheshire cat pattern here. It really, I have no concept of what this means. I just can see it fell out of that pattern, and so that was a huge indicator that maybe this isn't working anymore, right? If this was a support, it lost its support. And of course, these things, whenever they lose their support, they can always come back up to retest the bottom of the support before making a higher low and continuing to the downside. So if there is some pump up in this market, we should be aware and be open minded to potentially some upside where if we look at Bitcoin, for example, you can see we have this long institutional candle, which may end up getting reclaimed, right? We could end up having just some type of a pump up and then kind of a breakdown eventually later on, right? We don't have to put in new highs or anything, but we could potentially have a pump up just to kind of fill out this type of a kind of naked candle, right? That basically needs to have some retesting. And then that could also just kind of fill out this kind of double bottom that we had, and maybe it would be a base for more pumping in the future. But I highly recommend you check out my last video or some of the Macro Monday videos that I've made because we do have a lot of different concepts up in the air. I'm probably not going to share too many targets there with you, but we did, of course, have this rising wedge. More or less, we're at the same place we were a couple days ago, which is that if we break under this level, expect lower targets, perhaps around 19,000, 20,000 to 19,000. If you do want to recover bullishness, of course, we need to get above 23,000. So we could pump all the way up to 23,000 and not be bullish, okay? So we're just in the middle, just kind of hanging out, and we're not really in a short position and we're not really in a long position right now. If you want to confirm bullishness, you need to reclaim 23,000. You need to reclaim 24,500. And if you want to, really get bearish, you have to break this 20,700 level, and then of course probably 20,000 and 19,000. It's going to probably take you significantly lower. We addressed that in the last video, so I'm not going to go over that right now. This was more just of an update, okay? Guys, this video has been long enough, so I am going to end there. That was your alpha for the day. Stay safe and happy trading.